Welcome to RareWine Invest 2024 Annual Report. This is your quick executive review, covering the most important headlines and insights from the past year.
Welcome to the executive review of the 2024 Annual Report for wine investors. I'm Lars Granat, joined by Rune Splid, as we take you through the highlights of the report. Together we'll unpack this year's market trends, challenges and opportunities in the world of fine wine and spirits.
24 has been a challenging yet pivotal year for the fine wine market. The macroeconomics, pressure of inflation, high interest rate and the geopolitical uncertainties shaped the year as anticipated in our 2023 outlook.
However, there are signs of improvement on the horizon. The Fed and the ECB have eased their grip on interest rates and global inflation is stabilizing. Historically, periods of low or stable interest rates have been associated with upward trends in wine prices. This pattern suggests that lower interest rates boost trading activity, increase demand and liquidity, and ultimately drive prices higher. After years of a hostile interest rate environment, in 2024, it finally appears that leading central banks are easing their grip, indicating light on the horizon.
Let's dive into the numbers. RareWine Invest recorded a market performance of minus 4.65%, significantly outperforming the broader wine market, which saw a 9.1% decline. According to Livex Fine Wine 100, this result underscores the importance of a carefully curated portfolio in weathering turbulent times.
It is important to note that, while these corrections may seem discouraging, they represent a prime opportunity for value-driven investors. Iconic labels are now more accessible, setting the stage for long-term gains as the market stabilizes.
As now may not be the best time to realize luxury investment, we have demonstrated that there are still attractive profits in the market. In 24, we realized 1,707 positions for our investors, achieving an average return of 18.7% and an average holding period of just 3.5 years, below our recommended 5 to 10 years horizon. Most of these sales occurred contrary to our recommendation, driven by macroeconomics pressures that compelled investors to liquidate positions earlier. We have also seen a growing trend of investors taking positions out of their portfolios for consumption.
These results highlight the importance of having a plausible divestment solution with global distribution channels. Being a part of the RareWine Group means that we can offer our investors access to one of the 5 most prominent wine merchants globally. While selling in a bearish market can be challenging and prolonged, 2024 also presented lucrative opportunities for liquid buyers to acquire high-value assets at favorable prices. As always, timing is crucial.
The most significant price fluctuation in 24 were among the most expensive wines. While the Livex Burgundy 150 dropped minus 15.2%, RareWine Invest Burgundy selections limited the losses to just minus 6.51%. This reflects the value of focusing on proven vintages and producers. The Livex report that the Burgundy brands dominated the 2024 Power 100 list, holding the top 5 spots for the number of unique wines traded. Burgundy continues to dominate the Livex Power 100 list, with 30 producers hailing for the region.
Over the long term, Burgundy stands out as a desirable investment, achieving an impressive 537% growth over 20 years, according to the Livex Burgundy 150. This performance surpasses gold at 513% and the S&P 500 at 429%, solidifying Burgundy's position as a top-performing asset.
Similarly, Champagne experienced significant correction earlier in the year, but signs of stabilization emerged in the second half. RareWine Invest Champagne portfolio closed 24 at a minus 4.59%, outperforming the Livex Champagne 50 at a minus 10.6%.
Notably, older vintages from several Grand Marqués recovered during the last part of 2024. Pricing for new releases appear less predictable compared to more established vintages. As a result, we have adopted a more conservative approach by limiting inclusion of new releases in our investment offerings.
Meanwhile, Italian wines have solidified their position as a solid investment. RareWine Invest Italian portfolio declined just a minus 1.12%, so far outperforming the LiveX Italy 100 at a minus 6.8%. This is a testament to the growing global demand for Barolo, Barbaresco, Brunello, and the Super Tuscans.
In 2021, we increased our recommended allocation for Italian wines and separated Italy from the rest of the world category. Fast forward to 2025. Italy's growing prominence in the fine wine market is unmistakable, as reflected in the 2024 LiveX Power 100 rankings. Italian producers secured 22 spots on the list, an impressive increase of 10 compared to the previous year. Most notably, Gaia and Sassicaia are both in the top 3.
In Bordeaux, the Embrumeur campaign for 23 vintages struggled to attract interest, with the merchants finding established back vintages offering better valued. The LiveX Bordeaux Legends 40 fell by 9.5%, reflecting the challenging phase by the broader market.
RareWine Invest's carefully selected Bordeaux portfolio, however, remained steady, delivering a near-flat performance of minus 0.27%. This demonstrates the importance of focusing on iconic, proven wines, even in challenging times. With cellars already stocked with back vintage Bordeaux and weak demand, a considerable stock overhang has emerged, prompting an ongoing clearance effort. For over a decade, investors, collectors, and merchants have seen little profit from buying Embrumeur, and now merchants and negotiants are facing shrinking margins as the market searches for a sustainable clearance price.
And let's not forget the rest of world category, which includes Spain, Napa Valley, Rhone, and Whisky, among others. RareWine Invest delivered a minus 3.32%, compared to the LiveX rest of world category 60 at a minus 9.7%. Moreover, we have observed a rising interest into red wines, and an expanding international recognition is expected to drive long-term growth in areas such as Spain and Rhone.
Whisky continues to drive interest from collectors, consumers, and investors alike, likely due to its impressive long-term performance. While 2024 was a relatively quiet year for whisky, with a performance of minus 1.1%, according to the Wealth Report by Knight Frank. This makes Rare Whisky the top-performing investment of passion, outpacing other assets like art, diamonds, watches, and cars.
As we predicted, significantly price upswings in the first half of 2024 did not materialize. Instead, we saw a year of recalibration, where investors adapted to a more stable interest rate environment.
Our recommendation remains clear. Wine is a long-term investment. Focus on a 5 to 10 year horizon, remain patient, and take advantage of current buying opportunities.
And with the major Mercosur trading agreement leaving the door wide open to a 260 million consumer market for European wines, we anticipate a bright future for the premium European producers. Also, growing interest from mighty India is worth mentioning.
That wraps up our 2024 annual report. Thank you for joining us on this journey through the fine wine market.
I'm Rune Spill, and this is Lars Granat. For more insights, visit RareWineInvest.com. Until next time, happy investing.